Okay guys, so in today's video I'm going to simplify what is the meaning of general journals. So guys, remember when we talk about a general journal, it's not the same as general ledger. When we are talking about general ledger, this is a T account. This is a general ledger. When we talk about ledger, we must see debit and credit like T account. Okay, so this is not the one that we are going to do today, but what we are going to do today is called general journal. When we talk about the journal, guys, we have to debit something here and credit something, and we show the amount here. This is not T account. You can see it's different. So I'm going to teach you how are you going to treat examples like this one. So by the end of this video, obviously you will be able to identify each and every transaction that you might face, and so that you can be able to do what, to prepare your general journal, because the principles are still the same. Okay, so if you know what is accounting equation, or if you know how to prepare accounting equation, this also can be simple for you because the principle along the way is the same. Okay, we apply the principle of assets increase on the debit and decrease on the credit, and equity minus plus, liability minus plus. Okay, so now let's try to treat all these transaction applying the same rule and see how are we going to record it here. Number one, they said Mr. Jam contributed 20,000 of capital in cash to run VK Traders. So in accounting, when you read the transaction, you must make sure that you identify two components at least, so that you will be able to do what, to debit and credit, because we can't just debit only. We also have to do what, debit. Once you debit, you also have to credit in accounting. So in this one, we identify a capital as well as cash. So when we talk about cash, we're talking about a bank which fall under assets, which means that what we have to check is this cash increase or decrease. Obviously, it is increase, which means that increase on the assets is on the debit side. We're going to say bank, and on the other side of yours, once we debit, we also have to credit, we're gonna have a capital. Okay, then the amount is gonna be 20,000. Simple like that. Now let's go to number two. New equipment purchased on credit at cost of 35,000. We bought equipment. Equipment is an asset. Is it increasing or decreasing? Is it going out or in? It's going in, which means that it's a plus. Our equipment will come on the debit side. Okay, which means that the rest is gonna be a word credit. We purchase on credit, we didn't pay, which means that we raise what, liability. Liability is going to increase, which means that we have to credit creditors control. Very simple, guys. Okay, so the amount is 35,000. 35,000. Very simple. Okay, the following one, wages of 15,000 paid to workers. Salaries and wages is an expense. Paid represent what? Cash going out. Bank is affected, but on the credit side, because the money goes out of our hands, which means that we're going to credit bank and debit what? Wages. Why are we debiting wages? Wages reduce the value of profit. The value of profit is under equity. Income this side, expense this side. Simple. Okay, amount is 15,000. 15,000. Okay, the following one, sales amounted to 65,000 has been received. We receive money, which means that our bank is increased. Bank, and the other component, of course, is sales. Sales is income, is come this side. Okay, and the amount is 65,000. 65,000. Very simple. Then the last one, a rent of 10,000 paid to the landlord. We paid. Money goes out, which means that the bank will come this side. Okay, and the other one is the rent expense. Rent expense is expense because it's going to reduce what? Equity. And the amount is 10,000. You see, guys, it's very simple. Once you know one item, make sure that you know one component that I'm sure that this must be debited, which means that the other one just credit. You're going to get it right because we don't debit both or credit both. I hope you enjoy and you learn something. Please just appreciate us by subscribing and like this video. I'm gonna see you on the next one.